I already know what you're wanting to know. I already know what you feel like is a problem for you right now, but it really isn't a problem. But you're not willing to listen to these discussions where I'm willing to sit down with you, spend my personal time. This is expensive for me. I could be doing lots of other things right now. I don't have to be doing this on my weekend. I'm choosing to do this because I care. I want to see you succeed. I want to see you do well. But I also want to do the best as an educator, and I don't want to half-ass anything. So when I try to teach something, I go into all the little subtle nuances that are going to be impactful, even though you may not appreciate it at the time because you think it's extra, it's fluff. It's not fluff. It's something that's going to be paramount to you because at some point you're going to try to implement this information. You're going to either do it with a live account, a funded account, Combine, or a funded account, or a demo that you have a whole lot of hopes and set goals. If it does this, then I'm going to move to a funded account, or I'm going to go to a live account if it performs well in this demo account. But you're not going to have all the information because you want to just pick and choose and have selective understanding. You want to go to somebody else that's trying to teach my subject matter. I don't know how else to say it than it's going to take you longer. And I've done everything I could over the years to try to simplify something that's very, very complex. If these markets are in fact ran by an algorithm, and I'm framing that in the argument for the people that don't want to believe it, if they are, wouldn't it require a great deal of theory to be understood? On what basis do they implement the price runs higher and lower? And when would they consolidate and frustrate you and not present opportunities when other people might see something in the chart and say, oh, there's something there, and they get whipped, sawed, and chopped up? I'm sharing that with you. I'm telling you when to see the markets in. It's going to be problematic. There might be opportunities there, but it won't be easy because it's going to be high resistance. And it still might go to where you think it's going to go, but it won't be a clean one single run to it. And I'm teaching you how to identify that. That's what you want to be pursuing. But those runs don't happen every single day. Those low resistance liquidity runs do not happen every day. Price fluctuates, yes. Price runs for liquidity each day. It runs for inefficiencies each day. But on the basis of how they do that, there's a differentiation between a high resistance run, where it will run a little bit, pull back, consolidate, run a little bit, pull back, consolidate, deep retracement, go up a little bit more, not go to where you think it's going to go, and then retrace even further, run where your stop loss is going to be, and then run there. That's high resistance. If you're just now learning how to trade using what I'm teaching, you'll fall victim to that and think that none of this works, and you'll quit because you don't have the experience or the backdrop of having back tested and seen this happen sometimes. And that's why I teach the way I do, because I want you to identify the characteristics that create those environments that's going to be high resistance, not for the sake of, telling you not to trade when there's Joe Blow down the street that's telling you, here's what I can do, and this is what I've done, and this is what my students did. Okay. I get students that get lucky doing something that I would have never told them to engage in, and they think that that was experience using something, but I'm not going to shoot down their inspiration. If they're motivated by that, I'm not going to talk that down. But I've seen many of my students come forward and say, look at this, I did this and did this. I'm like, okay, I know enough to know what you're thinking you saw there was the valid pursuit of that move. But for me to say that would deflate them. So I don't do that. And some of you might think, well, you're a terrible mentor because you should be correcting them. No, because in the beginning, you need every bit of cheerleading. And some of these people are very, very new. And if it keeps them inspired to keep doing it, by experience and by default, they'll learn what it is they should see in it. Like anything else, any trader that's been doing this for a long period of time, you know where your growth and growing pains were. And as much as you hated going through it at the time, as a mature, consistently profitable trader, you can look back and say, I'm thankful that I went through that because it makes me stronger as an analyst. It makes me stronger as a trader. It gives me the freedom to not pursue something that's probably going to hurt me. So knowing all those things, don't worry, I'm not going to leave out all the things on Sunday. I'll actually give you all the details here with this, what I use and get into it and all that business. But for the sake of discussion and moving on, there are times where, with my experience, and I don't know how to bridge over 30 years of experience now doing this. I can't in any way, shape, or form reduce it, condense it, make it quicker for you to digest and learn properly and know exactly what to do, when not to do, in any shorter fashion. And it's not for a lack of trying, because I've tried for decades. I've tried to make this shorter and sweeter, and I just don't know how to do it. And it might be a limitation on me as a teacher. I'd like to subscribe to that view, and I think that's what it is. But what if it's not? Can you fault me? Because I'm trying. I'm trying my best. And for some of you, my best isn't going to be good enough. And that's okay. It used to hurt my feelings because I wore my heart on my sleeve, and I wanted everybody to warm up to the things I was teaching and find easy success with it. And when I had people in my mentorship leave, I took it to heart. It's like, yeah, why would they want to leave? Like, I'm literally calling the market beforehand every single day, and it's unfolding like this. And I discovered over time, listening to people explain their hardships and what they wrestled with, they wanted to trade with it. Not just, okay, yeah, you said it was going to happen, but I want you to put me in the trade. I want you to carry me through the trade, thinking that that's going to somehow make it easier for them, when the only thing that would have done was created codependence. And some of you now have codependence because you're upset about me saying that I'm leaving social media in 3 weeks. Like the end of the world's coming because I'm leaving that. When you have the greatest learning opportunity ahead of you, you shouldn't be afraid of that. It's exciting. But I know what it was like, feeling like, I reached the end. There's nobody else that's going to help me. What happens if I never get it? What happens if I never get it? If I never get past where I'm at right now, when I finally threw in the towel and said, I'm not buying nobody else's books. I'm not buying anybody else's courses for the sake of learning. I still bought things because I wanted to see the things that I was teaching people one-on-one. I wanted to see those things start coming into the industry. Things that I talked about on Baby Pips found their way on forexmentor.com. And I had a heated exchange with Vince Noble in email. And I talked about it with Chris Laurie, and I told him, I said, you're the only person that had any value over there on that website. But for a number of years, I bought everything over there. And honestly, and I'm sure they're going to come and create sock puppet accounts and come and troll me and whatnot, but everything on that fucking website, forexmentor.com, is a bunch of bullshit. Bullshit. It's all bullshit. The idea of supply and demand, which is not what I teach, and I think it's ultimately bullshit, that's a good beginning point, because I think the best students that I have, and I've gone back and forth with this throughout the years, but I can tell you now, I'm convinced that my better students are the ones that try everything outside of me first. See that it's all bullshit. And then when you come and you sit with me and I talk about what the market's going to do in advance, and then you watch me call it, trade it, use real fucking money, make more money than these people make in a year, everything else is absurdly stupid and nonsensical. It's dumb to subscribe to anything else. And that's what makes me polarizing. That's what makes people hate me. That's what makes people that sell courses and other shit that might follow me, might like me because I'm sharing with the community, but they don't like this part about me. And I get it. But wouldn't you want to know my opinion? Like if you asked me, if I was on these interviews everybody wants me to be on, and they asked me what my opinion, I'm not going to bite my tongue. I'm going to say what I've always said. It's all bullshit. It's all bullshit. You believe in something that is not having any basis for what causes these markets go up and down. But for someone that's brand new in trading, they don't know how to read price, they don't know, they're intimidated. I saw enough from Chris's work that I had told many times, listen, go check his stuff out. He never gave me kickbacks for that. I didn't ask for that. I was giving you a personal opinion. But I also was inviting people to go really look at that stuff, and you tell me if that's what I'm teaching you, because it's not. But as a beginning basis foundation, sure. I think it would help you. Is it the be-all, end-all? Absolutely not. Is it the pinnacle of understanding what price action? Nope. Is he going to teach you what the algorithm's going to do, when he's going to do it? Nope. Is he going to teach you patterns that you can study and build a model on? Sure, I think he can. Supply and demand gives you a conceptual idea of the premise of support and resistance without with support and resistance, it's a vague theory that is going to be, if we have 100 people in a room, okay, that's okay. Here's a chart of corn. I'm not going to tell you the time frame. It's irrelevant. And you're thinking, well, I wouldn't even trade corn. Okay, well, that's not the discussion. If I show you price fluctuations in the corn market and I don't tell you what the time frame is, and I say, okay, show me right now where the trend line support resistance is, diagonal and horizontal. And then we collectively took all of the feedback that everybody that would be willing to sit down and do that, all 100 people, you're not going to see everybody agree with the same levels. You might see a collection of certain levels being highlighted, but just because of that makes it of no value. It doesn't mean that the market's going to do that. It just means that this is what these people have been conditioned. They've been taught, they've been trained, they've been primed, because that's exactly what this is. It's priming. When I looked at support resistance, I didn't want to learn how to use it right. I wanted to know how I'm going to fail using it. Because if there's that many opportunities to pick that many lines, which ones are going to fail? Because if I can figure out that, then what by default, what am I doing? I know which ones are going to work, right? So when I look at things, I look at, okay, how's it going to harm me? What am I going to do wrong? With that in my hands, what am I going to do wrong? I'm not enamored by something new that comes out. Somebody else may come out in the next year or 2, 5 years, whatever, if I live long enough. Some new thing might come out in trading, some new indicator, some new something or other, okay? And I'm not going to abandon this, what I have, okay? Because there's nothing going to improve upon perfection. Like I'm literally able to tell you beforehand, you're seeing it in your own charts, where the market will respect these inefficiencies, the highs and the lows, and then they'll revert them one more time in the future. And then they'll act as what you would expect a support resistance theory to do. But guess what? They don't teach inefficiencies like that. Chris Lloyd doesn't use an old imbalance as support resistance. It's one and done. This one's done. That's his words. It's verbatim. He's done with it. The guy he learned from, that's the logic that he had. That's the differentiation between me and him and everyone else. These very specific PD arrays, they're not rooted in retail. They're algorithmic. These are things that are going to repeat. I'm listening to people on CNBC say, oh, the low's in. People are going to be really caught off guard because they want to see this, the stocks are going to go higher. Where are they at right now? They overexposed themselves. They married the vein. They went out there and they went all in. You ever seen that movie Rounders? It's one of my favorite movies. The Russian KGB. He's playing poker with Matt Damon. He's taking his chips, saying, I'm all in. He's splattering all the chips and stuff. Real cocky, real arrogant. He knows everything. He thinks he's got Matt Damon over the barrel. Overconfidence, overexposure, and Matt Damon kills him right then and there. And he zaps out. That's how you react when you think everything for that one trade you're in. Because look at the climate. All this stuff's going on. This guy was talking to me last week, on Twitter. Thought he knew everything. Oh yeah, you want to be trading. Well, I don't think it was last week. It was a week before. These are the best times to trade. But he just announced publicly that he just found profitability. So if he just found profitability, he doesn't have track record. He doesn't have the ability to stay profitable. He's just now tasted it one time. So now that's who becomes the mentors. That's who becomes influencers, which is one of the things I hate about social media. You have to be with someone. Spend time with them. Because if they know what they're doing, you're going to see it. There's no doubt about it. You will know absolutely that there's valid theory being implemented. It's not contrived. It's not being pulled out of your ass on any given moment. Oh, this is pulled out of thin air and here it is. And just, dazzle them with bullshit. That's not what this is. This is logic that keeps repeating. I'm teaching you how to protect yourself, which is first and foremost. Capital preservation is the first thing that you have to have in your head. That, okay, there might be an opportunity there, but in the event that it isn't, I'm not going to over leverage and I'm not going to push too hard. I'm not going to do 5 trades today just because there's something going on around the world that's causing the market to move all around. So therefore, I see that as opportunity and I might catch a big run. Might needs to be underlined, highlighted. Might is not a absolute. Might is not a definitive absolute. You're going to have that happen. It might. And what I've learned in 30 years is those invitations where things might happen in your favor are more apt to be against you. But you went into this with the only wearing rose-colored glasses, and it's only going to be your outcome that's going to come that way. And you wrestle with it, and you arm wrestle because you have spent the whole weekend. It's going to be a big mover. There's going to be a lot of speakers. There's going to be red and medium impact folder events around the economic calendar. That means there's going to be a lot of movement. And I'm a trader, damn it. I'm going to go out there and I'm going to trade into drawdown, into losing your account, into failing your combine, into needing a new reset. I'm trying to spare you that because even though they may be limited in scope in terms of, okay, say you lost your funded account, big deal. What did you really lose? You just got to pay the fees to get back into it again and put the time in to get it back. Okay, it's aggravation. Is it the end of the world? No. If you lose your account with your own money and you had, I don't know, 100,000, 50,000, 75,000, whatever it is that you would have in there, 10,000, 5,000, whatever it is, if it's real money that you put in there and you lose it, that hurts. That hurts. That's like a kick in the stomach. It didn't just, ow, that hurt, and it goes away real quick. It hangs around for a little, it's like a liver shot. It just takes everything out of you and you're hitting the floor. Because that was your money that you worked very hard saving up, and you invested it with intentions of growing it. But then you didn't execute with a model. You didn't think about the things I'm talking about in this discussion today, which is identifying invitations to overexpose yourself. Just because there's going to be a potential for high volatility doesn't mean that you should be in those waters swimming around. In other words, I looked at this week that we just closed much like I view non-farm payroll, where yes, everybody expects some measure of volatility. Absolutely. It goes without saying. There should be, and it's reasonable to assume that there's going to be volatility when 8:30 comes on non-farm payroll Friday. The reaction to those employment number data is going to create this excitement to be a participant in the marketplace. And the market participants are being led astray by the algorithm and or manual intervention that creates these price runs higher or lower. And they want you to chase it. That's not buying and selling pressure that's causing those extrapolations higher and lower. That's not what's happening there. And because it's moved around, you've seen it happen before, you think that you're going to be able to navigate that and get in there and take a trade. And now the same mindset that causes people to trade that non-farm payroll, when they see geopolitical things heating up, market getting volatile, well, guess what? It's casino time. It's time to get out there and press our luck. Well, that's not what I do. I've learned that these are the very economic climates that I have unraveled myself. I've done it in stunning fashion. I've done it faster than I ever thought I could. Okay? And believe me, it's demoralizing. Okay, it sucks. If you're new and you're trying to implement the things you see in my core content lessons or the things that you see me teaching in an individual, like a TGIF setup, okay? Because I taught that setup in that context to interpret price action, go back and listen to it again. And you're going to find that I had said this, and it's not hidden from you, but because you went into it with selective hearing, you want to go in there and take something, to use the metaphor that I used earlier here and many times. It's if I show you a magic trick with cards, okay? Immediately you want to grab the cards from me and see if they're a real deck of cards, and they would be real. You could bring your own deck of cards, and I would be able to do everything in those cards that I could do with a card deck I had in my hands before we met, because I understand how to manipulate them. I know how to do all the sleight of hand. I do all that stuff, okay? Well, when you listen to my lectures about trading and you're brand new, predominantly it's the men. It's always the men. I've never done a magic trick for a woman where she's like, oh, let me see, I can do that too. They never do it. They don't have to prove they have a bigger dick. Okay, they don't think that way. But a guy, right away, okay, give me. I know how to do it. I know how you did that, and they fall on their face, and then they're mad at me because they think I tried to make them look stupid when I didn't invite them to pretend they understand how I did it. But most of you that come as a young man and you watch me teach you how to do these things, you'll sit down, you'll watch the video, you'll probably scribble a couple things down, because otherwise, you want to be able to say, if I say you need to take notes, you can say, oh, I did that. But you're not really listening, because you'll go back and listen to those same videos and say, oh shit, I didn't hear that the first time. Why? Because you went in there looking for just enough to go out to a chart and try something. And then you what? FAFO. Fuck around and find out. And so many of you want to go out there and try to do that with your accounts that have real risk. You invest the money into a funded account challenge and you fail it because you tried to do something prematurely. You don't know what you're doing. You just went out there to try to figure it out. Okay, he said this. If it looks like that on the chart, it's probably going to do that. Okay, but what else can I say about that? Just because there's a fair value gap doesn't mean it's going up there to go down. If the idea is that it's ultimately going to go higher, we want to see it trade through the fair value gap and then come back and treat it as what? A discount array to accumulate new longs. But see, you're not willing to listen to that because you want to see something that will be a catalyst, something that gives you the inspiration and the excuse why you couldn't control yourself and you had to press the button because you heard ICC say on a video, this is what it does. So therefore, every down closed candle is a bullish order block. And that's not true either. And that's why it's important that you are properly mentored. You have all these long-winded, dry, boring discussions, which is required. You can't teach this stuff without it. And nobody else knows it. So you can't go to somebody else, even as much as they may have my logo and they may talk about me and have respect openly and publicly, but they're just still trying to milk my whole brand so they can make money teaching something they don't fully understand. And then you wonder why People are confused. It's not because they're getting confused from what I'm teaching. I'm laying it all out here for you. I'm giving it to you for free. I'm explaining in advance why it should do this and why it shouldn't do that, how to avoid markets that are going to be problematic. You have to be highly selective. You're not going to have that skill set if you're brand new. Even if you were in my 2016 first mentorship group, they are not going to know what I was utilizing going into this week. They're not going to have the experience doing it. They don't know it. It takes time to do these things over and over and over again. It's seeing, okay, this is what it should do, but I'm being cautious because it's probably not going to be conducive for a continuation in a higher dollar rally. I'd like to see it go higher, and I told you what I'd like to see. If it does that, then I'll commit publicly and start talking about what I want to see do. But until it does that, I'm just sitting on my hands, and I'm comfortable with. If I got nothing to share in advance, that's fine. But what did I tell you about the dollar index? I said 106.55 is too clean. How much more did it go above that? Not much. And then went back down into its daily fair value gap. Was I right or wrong? It depends on who's answering. If you want to make me look like I don't know what I'm doing and I'm a fraud or a con artist and I can't call things in advance, I won't trade live in front of you, you'll say, well, you got lucky there, or it's up for debate what you were really meaning by that. And other students have been with me for a long time know that there's value in that because that was the draw on liquidity. Nothing higher was suggested because what did I say? That level's too clean. Meaning what? It's ripe. It's perfect for a sweep. Do sweeps continue? No. They go above it, they retrace lower. You won't know that when you first warm up to this content and find me. You won't know that. I'll be cryptic to you, which is frustrating. But it's not hidden from you. It's in all those videos. Seeing me do it over and over, explaining it beforehand, over and over and over again. It's conditioning you to trust the theory because if it doesn't work, I won't be able to use it beforehand and show you what it's going to do. If I don't know when the market's going to be problematic, I wouldn't be able to tell you in advance, this is what's likely to occur. And therefore, I'm sitting on my hands. And there are weeks that are, look at how it was in the first part of the week. It was weird, right? It was running up, down, like, what the hell is this thing trying to do? Right. I'm not worrying about it. I have other things to deal with. But where I felt comfortable, I'll point to it. And the only thing I felt comfortable sharing was that 106.55 level on the dollar index was too clean. And then right after I said that, it ran up there, and that was the high. And then right down into the daily fair value gap and stayed there. For some of you, you're thinking, well, what's the big deal about that? Who cares, dude? You know, it's the dollar. It didn't move that much. It's the context around what it was not willing to do, which was to go higher. And the fair value gap didn't fail either. Oh, but it did. It went outside the fair value gap on the lower end. It did a little tiny little mohawk. Did it close below it? No. Look at the next candle. It's inside the fair value gap.